Markets never sleep, but they do whisper. This week, we decode those whispers across volatility, currency trends, bond trajectories, and key sectors. We'll pinpoint the setups, highlight the levels to watch, and trace the early signals the crowd has yet to see. Today, we start with the Volatility Index. And this is the candles that it closed today on Friday. So the daily candles for the index itself and for the futures are clearly bearish, and we are expecting a move lower. So far, all technicals support a continued move. If we look at the weekly formation, weekly closure, it's an interesting build here, and it could be a bottom, but at this point we are yet to see a strong reversal candle. And on the weekly frame, for the futures, the candle is also bearish, and most likely it's just a hammer that will push the index further down. If you're interested in a bigger perspective, we also discussed today in our weekly digest the bigger frames and the perspectives for the upcoming months. Now let's talk about the dollar index. So what's happening with the dollar? Most likely the dollar is forming a very significant bottom. Last week we discussed it formed a bullish engulfing, and this week it pushed the price just above the resistance level 8 weeks moving average, exponential moving average. So at this point we are looking for a continued move higher. On the daily frame, the candle formation is likely bullish neutral, and this is just a consolidation before moving higher. And I'd like to say that the 50 days moving average so far is a strong resistance, but there is a good chance that it will be overtaken in the next couple of weeks or couple of days. And all eyes are on the monthly closure. This is a very interesting formation. At this point it is bullish, and if it pushes a little higher, well, it would be a reversal. And if we look at our chart that has a big history, we started tracking it on March 29th, and when we first outlined the target for it, somewhere between 98 and 95, and later on we did some adjustments and outlined the exact targets. So on April. So far, these targets remain the same, and we are thinking about this potential bullish flag. So far, this dollar index made a reversal here, and it is forming a wave up. And if it forms a very strong impulsive wave, then, well, that's what we would be looking for. Potential strong move towards 110 or even higher. And if we look at the long-term perspective, this is something that we're tracking for very long time. This is the final the most recent update to our long-term chart in November 2023. So far we are seeing that dollar ended somewhere here in this blue rectangle, and right now it is possibly forming a bottom right at the long-term support line. Well, if it forms it here, then we would be looking for a very strong rally in the next couple of years. So this is long-term perspective for dollar, and I think that the precious metals investors might want to take a note or two. Well, now let's talk about the bonds market, and we start with the candles for the 10-year yield. So far, the candles are bullish, and on the daily frame, there is a possibility of rising three methods being formed. On the weekly frame, we have a confirmation. Last week we had a confirmation of a bottom, and this weekly candle is most likely a neutral bullish doji with the chances of moving higher. but this flag hasn't been confirmed yet. So maybe in the next couple of weeks we will see the rates pushing above 4.5 and higher. And the 15-day frame, which closed just a day ago, formed a bullish engulfing, which solidified the bullish odds for the midterm frames. If we look at the 20-year yield, which is an inverse counterpart for the TLT, what we can see here, this is potentially a very strong impulsive wave. So this is a very clean impulse of the bottom. Now we are looking for wave 2 consolidation, a bearish consolidation, and after that there is a very good chance for a very strong wave 3, which might happen later this year. Well, that's the perspective. And now let's quickly have a look at the Canadian market. So this is the monthly frame. And what I'd like to say that this is an impulse that started in April 2020. And now we can see it completed. So after this impulse, we had a corrective wave down, and there is a very good chance that we are seeing a bottom of this wave, and there is a possibility for a strong move higher. If Canadian rates are closed with this candle, 5-year yield, then I would be looking for a very strong continuation here. Let's see what the Bank of Canada has to say on July 30th. Now let's have a look at different yields, different maturities. What we are seeing here is that the 2 and 5-year yields are somewhat bearish, but 10, 20, and 30 are likely bullish, and they are forming like a rising three methods of some sort or of different strengths, and it brings an interesting topic. So we are seeing the longer term maturity more bullish, and the lower smaller maturity is bearish. And now it's time to talk about the spread between 10 and 2-year yields. So what we are seeing here, potentially very strong impulsive wave being built, and I'd like to say that this bullish continuation flag most likely is complete based on the candles and some technicals. So we would be looking for an extension here towards the blue rectangle. This is a very interesting combination here. Nobody probably expects it, but let's see what happens to TLT. So TLT is bearish. Unfortunately, it is bearish. So the 15-day frame closed with a strong bearish continuation candle, most likely then side down. The weekly frame, it is bearish. However, maybe it's not that strongly bearish. So this is the possibility of a reversal, but it's very minor at this moment, especially considering the bigger candle closure. And on the daily frame, if this is a rally, so this is a very strange start of it. So most likely it's just an inverse formation of a falling three methods with 3 red candles. So let's see what happens next. So far, candles are saying that TLT is bearish. And this is the flag that we discussed earlier in June, saying that TLT most likely completed this corrective structure and would be looking for a move down. So far, I'm seeing an impulse here and the corrective structure for potentially wave 2. It might go slightly higher, possibly for another couple of days or even more before moving further low. Now, that's all about the bond market, TLT. Now let's talk about Japanese yen. So if we look at the candles, we are seeing that the dollar is gaining strength every week. And this is the 15-day frame, very strong bullish sequence here. On the 10-day frame, which closed earlier this week, we are seeing technically a bottom. And on the daily frame, there was an attempt to reverse, but unfortunately it failed, and now dollar is gaining strength. If we look at the weekly frame, it's a clear bullish closure, no questions about it. And by the way, the weekly broken through this 50 weeks moving average, which is a significant technical event, and the other technicals are greatly supporting it. If we look at the chart, so this is the short-term one. I think that it was the bottom here in April 22nd, and we had a leading diagonal followed by a bigger wave 2, and now it's an impulsive structure here. US dollar yen potentially moving towards 155 160 area. And if you're looking for a bigger structure, this is the chart that we are discussing regularly, and we are tracking it since 2023. So far, I think that wave 4 is about to end, and we might see start of wave 5 of 3. That's the chart again. So we are talking about it since November 2023. No changes here. Well, that's all for yen, and I'd like to talk now about Baltic Dry Index, which is known as being a leading indicator for the market. So let's see what happens with the global trade. We are seeing a very strong bullish candle here. Most likely it is wave 3 of some degree starting based on the trends. And the 10-day frame, it closed with a bullish candle, and now there is a chance for it to complete a confirmation of it, but we would need to wait for another 10 days. The monthly closure would be instrumental. If it closes above the high of the previous candle, it would be definitely a bullish structure. And this is the chart that we've been tracking for a long time. I think there is a possibility that this was wave 1 or 2, 3, 4, or this was wave 1 and this was wave 2. So at this point, it's not that clear, but nevertheless, the strength of the wave is impressive, and I am looking for potential impulse, somewhat similar, by the way, that Baltic Dry Index formed in years 2020, 2021. Well, that's all for the index. Now let's talk about some strategical sectors. So first of all, technology. What we are seeing is technology looks like it is unstoppable here. Again, on the weekly frame, we are seeing a strong bullish continuation candle, which negated the previous one. On the 15-day frame, again, also a bullish continuation candle. On the daily frame, it's most likely an on-neck structure, which is viewed as a bullish continuation combo. So from the candle's perspective, technology is bullish. If we look at the Elliott waves, this is the chart that we've been tracking for a while. The most latest update, it was in June 15th. We are saying that technology had a chance to move toward this target 264 or possibly higher. And those who listened, they have made about 10% so far. So this is where technology sits right now, but based on some technicals, I'm leaning more and more toward this particular structure. So this could be wave 3 here, and after that we might see some pullback for wave 4, and wave 3 is not finished yet. And so far it extended already 2.2 times the wave 1, and we know that for technology it might be 2.6 or even 3.6 times of the length of wave 1. So far the technicals are supporting a move higher, and I'm not seeing any strong reversal signal at the moment. Now let's talk about finance. But before we move to finance, I'd like to show you this one. So the technology sector is 31%, financials about 14%. So the two of them together, it's 45 plus, close to 50% of the entire market. Well, that's the perspective. And now let's talk about the financial sector itself. So the daily frame on Thursday, it confirmed a reversal fair and square. This candle on Friday, most likely a consolidating doji. And if we look at the weekly frame, this weekly candle practically cancels this strong bearish candle that happened on the previous week. And I would be looking for a continued rally here. And if you look at the bigger frame, 15-day frame that also closed on Friday, is just a regular bullish continuation candle. If we look at the charts, this is our chart that we've been tracking since July 10th, 2023. Yes, for 2 years. And this chart remains unchanged, everything. And those who followed this call may have been made approximately 55% from the moment of the call on the financial. So far, I'm not seeing any signals which would prompt me to update the chart. And for the short-term perspective, I think that financial sector formed a very nice flag, which has a target here somewhere between 55 and 55, 54. And from the current level, it would be a rally about 4%, 4 to 6%, the most typical path. And if we are accurate in our timing projection, I think that the next 4-6 weeks will be quite bullish for the financial sector. And it brings a question. So if the financial sector is bullish and the technology sector is bullish, and they are roughly about 50% of the market, well, so the market's probably also going to be bullish. That's everything I wanted to talk about the technicals. And now let's talk about our swing room. As of July 16th, our swing room stayed long on SPY. And since flipping long on June 16th, the SPX has added 320 points. Over the past year, while the SPX returned about 13.4%, our swing setups delivered 33. This is for tier 2 unleveraged, and about 31% for basic room. That's the power of trading alongside master trader David and his disciplined algos. Reach out anytime for an exclusive entry discount at help@investingangles.com. And now let's wrap it up. Volatility whispers of more downside. The dollar builds a foundation with conviction. Bond yields are coiling for a move, and if you've overlooked Canada, you may want to look again. TLT keeps sinking, untouched by reversal hopes. The yen bleeds momentum while the dollar reclaims strength. The Baltic Dry Index at thrust supporting the macro story few are watching. Technology is roaring. XLK is up 10% since our early call, and financials quietly building steam for a summer performance. Everything we shared today is just a slice. The real setups, the wave counts, the target zones all live on our website. Share this video, subscribe to the channel, and follow us where we chart the charts before the crowd even blinks. This is Investing Angles.